Banks are constantly investing in systems to safeguard client information, as well as to ensure that hackers are prevented from stealing funds from clients' accounts. The global phenomenon recently saw a number of high-profile cases reported in the UK, with large US bank JP Morgan's systems also compromised in recent years. Keeping ahead of the cyber criminals is a major cost for banks.
It's a global risk and a risk that were highlighted by the South African respondents. And it's really around cybersecurity and the worry that international and local respondents have around cyber attacks and their vulnerability, the level of sophistication of cyber criminals and the number of attacks that they have. So I think we've seen a number of cyber attacks during 2015, and the worry is that will just increase in 2016.
There are concerns that a severe cyber attack could lead to a financial institution folding unless the state were to consider it too big to fail and bail it out. In emerging markets, there's a worry that slowing growth and currency depreciation could pose market and credit risks and in turn threaten the quality of banking assets like loans and credit cards. In the event of a sovereign credit downgrade to junk status, it would be negative for banks and the wider economy.
Funding cost goes up, which makes our borrowing that we get from banks more expensive. So that will have the direct impact on the consumer, is that you will pay more to have a house loan, to have a credit card, to have a personal loan.
The PWC report found that banks had a better handle on their liquidity levels. This on the back of implementing global regulations which stipulate that financial institutions must have minimum level short-term reserves for a rainy day. Nompumelo Siziba, SABC News, Johannesburg.